I invite the keynote speaker, Mark Kelnhofer, the president and CEO of Return on Ingredients, LLC, and the Restaurant Institute, LLC, to take over from here. Please welcome him to the stage.
Good afternoon. So today, in this very short amount of time we have, in the next 30 minutes, we're going to talk about a pretty important topic. So I'm going to tell you a little bit about myself first, and then we'll get into it without any ado. So I did start Return on Ingredients back in 2009 as a consulting company that really specializes in recipe costing, menu engineering, recipe documentation, all around managerial cost accounting principles. And then a couple years later, I started the Restaurant Institute, which is really an educational component where we have seminars, books, publications, and training to assist the restaurant operator in becoming successful. I am also an adjunct lecturer at Ohio State as well as Georgetown, both with the focus of cost controls. So when I do these courses, I typically talk much longer than 30 minutes. So I'm going to try to cram as much information in 30 minutes, right? And Chef's going to keep me online, so she's going to make sure I stay on track. So today we are going to talk a little bit about recipe documentation, recipe costing, a little bit about menu engineering. Ultimately, it's such a critical, important component to what we do as a restaurant operator or a food service operator. So we are going to talk about the different aspects of things that I like to see when I'm visiting a client, and hopefully by the end of the day, in 30 minutes, the end of the presentation, you'll have a better appreciation of some of the complexity that we typically see. So what I'm really talking about here is a paradigm shift. You know, ultimately, when we're talking about changing the discipline of a company, and that's really what we're doing in many cases here. We're changing how we react. We're changing how we look at cost, how we identify cost, how we use it for a variety of different things. And we end up doing that so that we can become more efficient, more profitable, increase in cash. So we talk about this all the time with my students, and we'll continue to do that. So one of the top reasons we should know our costs is, first of all, we are in a competitive environment. That's the first one. If you think about all the areas where we can potentially eat anywhere, think about it. Those are all competitors. Okay, so we want to make sure that at the end of the day, we're profitable, we're making money, we're the ones that are going to be around in the long haul versus those that don't. And in many cases, I can tell you, there's a lot of cases where operators do not have a clue what their cost is. They may know if they're making money or not, but the one thing they don't know is how to cost out the product and plan for profitability. And that's one of the things that we're going to do a little bit today. The other thing is that this is one of the most difficult businesses I know of, right? We have a fairly complex business. You know, a lot of people jump into this business with not a whole lot of knowledge about how to run it. And certainly we want to make sure that we're profitable. If you look at the failure rate, and it doesn't matter which study you've looked at before, failure rates are consistently high. And I really believe this. I believe that in many cases, restaurants fail because they really do not understand the numbers of the business. Okay, so when I talk to my undergraduate students, I tell them in many cases, you know, we need to be methodical about what we're doing. We need to understand what our true cost of making the product is. And so they understand, hopefully at the end of the semester, the importance of what these numbers mean. And so we're going to get into some of those. So the rate is high. We have almost 100,000 businesses fail. This is pre-COVID. But we had a lot of businesses fail during COVID, obviously, for all kinds of different reasons. Reduced volumes, they didn't have enough cash to outlast the long time of these restricted volumes. So these are large impact on the industry, large impact on the jobs potentially that are lost, the tax revenues, and on and on and on. None of us like to see a business fail. And none of us like to see or want to close a business, but sometimes circumstances dictate that. So on this survey, one of the things it says on this survey, which actually I love, says that managers do not understand the importance of prime cost. Now, I speak at many trade shows throughout the nation, and I can tell you this, is that when I bring up the word prime cost, many operators don't even know what that is. Prime is the two largest costs you're going to have: ingredients, labor, right? Those together are prime costs. So when we start talking about these terms, we want to understand what they are. And hopefully we can come up with ways to better control these costs since they're such a large impact on our business. So one of the things we have against us is commodities are increasing constantly and decreasing. They're changing, right? I mean, I'd never like to see bacon go up, but it happens, right? And right now, how about the people who've seen the beef prices through the roof, right? So we have a challenge here. One of the challenges that we have is that our commodity costs are constantly shifting. The other challenge that we see today is the labor component, which we'll talk about later as well. So commodities shift. You know, it's hard to keep tabs on commodities. And so there is this resource out there, and I've always promoted, even though it's not my publication, but it's a great publication. First of all, it's free. If anybody is not subscribing to Food Business News, they should. And as part of this publication, it actually shows you commodity forecast. Wouldn't it be great if you had a resource that actually showed you by different commodities where those costs are going to go down the road? We should have that visibility. That's something we should have in our toolbox, and many operators don't look at things like this. Now, I tell them, you don't always have to read this cover to cover, but the one thing I would do, I would drop into that commodity ingredient markets there just to take a look and see where things are going for those ingredients that we're going to use within our menu. It's that important. So when I see restaurants attempting to do cost modeling, and this always happens, right? They say, hey, here's the cost of our product on a given day. Then they roll out the menu weeks later, and what happens? Costs change, don't they? Immediately, costs change. You know, so a lot of times we have shifts in commodities. Maybe it's taking us a longer period of time to make the product. Ideally, we should have a way so that we don't just eat the cost as it happens. That happens a lot, doesn't it? Costs go up, you explain it away, and all of a sudden we're not as profitable as what we want to be. Okay? Wouldn't it be great if we had a way to look out into the future where that worst case scenario is? We should have that capability to be able to look out during the whole time the menu's in place where those costs are going to be and determine what's my worst exposure in terms of cost. So I like this slide. I know it's a little older, but I like it for a couple reasons. One, this line here where it says food cost, those operators looking at that topic as being one of the premier problems that they have. It's generally in the same area every year. It hardly ever changes. So it's always usually around 22, 23%. But what's interesting about this in 2015, look where the labor cost concern is. Where do you think that is now? It's got to be way up there, right? Wages are way higher than they ever been. We have a labor shortage in the quality of employees that we're getting. This labor piece, if you were to do the same survey, I've been willing to bet you that could be just as high as the food cost component. We are in a very tumultuous time between food inflation right? Food costs going up, labor costs going up, labor pool smaller. We have a lot of challenges that we need to address, and they're not going to be easy ones, that's for sure. So how we respond is so critical. I used to have, I tell this story all the time, but I used to have a CFO for a client one time, and his only response to any type of cost pressure was to raise price. That was it. I go, well, that's not always the best response. In fact, consumers and guests that we have in our operation, they see those increases over time, right? And you might, in terms of value perception, if you took multiple price increases over time, all of a sudden the value proposition drops as well. So price isn't the only thing that we should think about. We should think about all kinds of other things, alternative products, portion size, you can go on and on. But the one thing I always say is we've got to be methodical about what we're doing, right? We shouldn't just make a decision just to make it without having some real numbers behind what the decision's about. Now, the one thing I can say is that we are in the business, right, that has two sides of the brain here. A lot of times in this business, we have a circumstance where sometimes decisions are made off of one side of the brain. And so really, if you think about the art of what we do, right, the chefs love it, right? They have creativity and flavor profile and consistency and presentation, which are all important. But just as important are the numbers behind what we're doing. You got to have both to make a good decision. Now, I have seen some cases where some decisions are made just off of numbers. And you, again, can make a bad decision just off of one side of the brain. We need to use both sides. They're both important, and we want to make sure that we're very methodical in how we make our decisions. So I believe this to be very true, right? At the base, that recipe documentation is so key and critical to everything else we're doing. The recipe is one of the more complex areas that we have. But unfortunately, it doesn't always get the attention it deserves. But if you think about costing, and I can tell you this right now, I've been to some places where I've gone in, the first question I have for the chef is that I'm going to look at their recipe documentation. And if he comes back and says, we don't, and this has happened, we don't have any recipes written. So right out of the gate, when they tell me that they have either no recipes or very little recipes, I know that costing, they have not a clue. Right? But think about this, it's more than that. Yeah, sure, we need that documentation and data to determine what the cost of the product is. But how about training and consistency and quality and all those things that go into the product? When I go into a restaurant, I see partially documented recipes, it tells me a story, right? It tells me a story. So everything that's above this is contingent on how well that recipe is documented. So it's pretty important that if we're going to document it, we document it right. So again, I've been to places where recipes are not really done that well. Right? In fact, I've been to places where they don't account for all the processes that happen within the operation. Think about all the things that we're doing when we're producing food. Chopping, julienne, right? Picking, you name it. We have all kinds of losses that occur typically when we're processing food. And because of that, we have to make sure we document all those processes. And typically, they don't happen by themselves, right? So when we start talking about yields and all of that, many chefs have heard of that before. But the thing we've got to keep in mind is that it's taking somebody's time and effort to do a lot of these things. So I always give the example, to my classes, peeled bananas. When you peel that banana, right, and we pay for it by weight, and as soon as you peel it and you take that peel and toss it, we have something that's usable, we have a piece that's not. It took somebody's time and effort to do it. It's not in the same form as it was before. So no matter how simple the recipes are, if we're actually creating that process or processing that ingredient, we need to document it for costing. Right? It's important. You might be surprised how losses build up over the accumulation of cost with all the different things that we're doing. The other thing is that we don't always take in consideration density. Chefs love to use portion control tools, don't they? Cups, spoodles, teaspoons, tablespoons, you name it. So if they say a cup of sugar, is it 8 ounces? The answer is no. A cup is a fluid ounce weight of measurement, right? 8 fluid ounces. But a lot of things we use that cup for are not fluids. We have to understand the proper weights and measures. So when we apply density, we need to know that for costing so we have some accuracy of what that's going to be. And in some cases, when we get down to recipe costing and eventually pricing, sometimes the pricing is not done very methodically at all. If they don't have proper costing, I've seen this before where the chef puts a dish right in front of me, says they love the flavor profile, consistency, and quality, and then the next words out of his mouth is that I'm going to sell it for $26.95. Well, I said, well, how'd you come up with that? You know what the answer was? I went to a competitor on the other side of town. They had the same type of dish, $26.95. So I quizzed the chef a little bit. I said, do you know if your competitors are making money? What do you think he said? No. Do you know if we're making money? Because that's important, isn't it? We need to know if we're making some money. He didn't know. Right? So this is part of the process, is that when we look at costing, we got to take more of a managerial cost accounting approach to determine what our true cost is. So we have some things that are under our control when we run a restaurant or operate a restaurant, but we don't always really give it the importance in some cases that it really truly needs. And these things, when you start thinking about costing and pricing, they're not always easy, are they? Especially if you have a lot of processes, a lot of things that you have to produce. So there's some complexity here. So when we start talking about recipes, a batch recipe, a prep recipe, that's something we're doing in advance. It's not sellable, but a menu level recipe is something we sell. Typically, I always start at the batch level because a lot of the batch, a lot of the processes aren't documented, which means we have to go through the process to determine what the recipe is, what the yield is, the amount of time it takes to produce that recipe. So I've been to places before where I can tell you this is one area where the documentation is not done very well. So we should account for every process. We need to definitely make sure that as recipes get documented, the yields are documented as well. It's required. In order to have cost accumulation, we've got to know what that end result of the recipe is. And if that product has changed in any way, we need to account for it. That means it's changed from its original purchased product. It's something we should be documenting and costing out. If we don't account for all the processes, the costs that you have are going to be understated, your profit then is going to be overstated, right? Which is not what we want. We want to have some reliance on what that profit's going to be. If you get in the area where, and many restaurants have, where we talk about packaging, you know, a lot of restaurants now are getting into the retail component side where they're selling product as retail, they're selling product as grab and go. Any type of packaging we have is going to be incorporated in the cost of our product. So we should account for the bottle, the label, the lid, the carton that it's in potentially. Those are things that we should include as part of the cost of the product. Now, the one thing that I can say is that traditionally, when we look at a restaurant food service operation, traditionally we sometimes see where the operator will calculate the ingredients, But then they stop and they say, we're done. We know the cost of our product. Well, anybody who's taken a managerial cost accounting course know that that's not exactly true. We have two other components of cost. We have labor and we have overhead. Okay? So when I tell my students this, I say, you know what, let's just think. There's three components of cost. If I identify one component of cost, which happens a majority of the time, and it might be well done, it might not be well done, and I set a price on my product, do I know for sure that I'm making money? And the answer is that they don't, because they haven't identified the other two components of cost. So the next component of cost is really labor, and then we get into overhead. But have you ever heard of this? I hear it all the time. We've never done it that way, right? That's typically what I hear. We don't do costing that way. We don't put labor costs as part of our product. Well, sometimes I say, well, maybe we should. Have you seen the failure rate? That's one thing I always go back to. I really believe that in many cases, the reason why the restaurants fail, they don't know their true cost of the product. So when we get into labor, it's that chef that's producing the product. Direct labor means their hands are on the product, they're manipulating the product, changing its form to create either a working process or a finished good. But we can account for that doing time motion studies. So if you've ever heard of that in the manufacturing world, we can do the same thing. Both labor and overhead are reliant on a prep time loaded on that recipe. That's our labor standard, isn't it? When we set standards for ingredients, we set standards for quantities, we set standards for the amount of time it takes to actually produce the recipe. Those are things we need to have documented, and many, many, many times they're not. Now, how difficult is it to set a labor standard on a recipe? You know, I don't like guessing, right? So when we start talking about direct labor and overhead, having a time standard, I like to have a stopwatch, right? In fact, I got this nice fancy one called a time stack. It's got 4 stopwatches on it. So I can actually time different activities as I'm sitting in the back. So we're going to get into variable and fixed overhead in a little bit. But one of the things I want to show you is that this is a report from Baker Tilly. And the only reason why I have this here is I want to make sure you understand that I'm not totally off my rocker, because they actually look at food cost, labor cost, prime cost. So you can actually look under different types of restaurant concepts. You can compare your performance against performance within an industry. So there are other people looking at these numbers other than just me. So we really need prep times loaded on recipes. Again, I don't guess. So the one thing I do is I make sure that when I create that standard, I'm creating where the activity is happening. It's not with the corporate chef. It's on the line with the personnel that are actually executing the recipes. I want to know with some accuracy what we can expect, the time it takes to produce each and every recipe. So we can do it. We can capture it. There was a client I had in California that had a lot of hands-on products that wanted to get the prime cost and even total cost. And I looked at their prep recipes, and there wasn't a single, not one recipe with the time loaded on it. Now, is that common? You know, I've seen sometimes, in many cases, yes, I see no times. Sometimes I see times on them, but it concerns me if I see 5 minutes on every single recipe, which tells me maybe somebody was just putting down a guess. They didn't validate it, so we do want to make sure that there's some accuracy to this. So anytime we have direct labor rates, we're talking about not only the rate that we're paying that person to execute the recipe, it's also all those benefits that go along with it. So when we talk about workers' comp and insurance and other things, that's part of the cost of having that person there. So we have to be careful about how we structure our direct labor cost, how we calculate it. If we look at overhead, we're really talking about all the other costs other than ingredients and direct labor that we have to operate the business. That's overhead, right? And so we want a way to allocate overhead. Anytime we do this, any accountant who's in the room has been through this, predetermined overhead means it's an estimate, right? Hopefully it's a calculated, thoughtfully done estimate, not a guess. Okay, so I do like to see some accuracy with that. And when we do this, we do have to periodically and should revisit this, especially when we have the circumstance we had recently with the restricted volumes with COVID. So I'll tell you that here in a second. Okay, so when we talk about variable and fixed, in COVID, if we think about it, when volumes drop, automatically, we're going to talk about this a little bit more, the cost of the overhead per menu item goes up. We have less volume to spread that overhead against those menu items than others. The issue is that many operators don't really look at cost in this way, but we really should have an idea of how costs act. Is it a variable cost? Is it a fixed cost? Because that's going to tell us and help us about how we can potentially respond in circumstances where volumes drop or volumes increase, okay? So if we have overhead drop, right, we have the same amount of fixed expenses typically. We don't really have a whole lot of decision to be able to change some of the fixed pieces. I mean, as an operator, can we drop depreciation, rent? Those are things that are very difficult to change. And by doing that, we automatically have an increase in cost. Well, if I were to go out and look at all the restaurants that I have clients for right now, and because of what I do, they knew what that impact was. But many operators don't really revisit the impact of their menu items when volumes change, even when they go up or down. Okay? So the biggest area of opportunity in many cases are those variable pieces. Those are things that we have some control over, we have some say over. We can potentially look at ingredients to get a different ingredient in. We've got to be careful with the substitute ingredient because of quality. We can look at maybe having something made versus bought, right? Those are two different things as well. But those variable costs are areas that we have some control over how to change. So I know it's only a very short presentation, but I really believe that cost controls are so critical to the operation. I believe the recipe documentation is the base for everything we do. That's where all the standards are set. That's where we actually determine cost. And profitability at the end of the day is what it's all about. It's about the ability to increase cash. The more cash we have, the better off everybody is, right? And there's only limits. There's limits on how much cash we have, right? Those are my two email addresses. And then my cell numbers, that is my cell number. So if you want to text me, you can certainly do that. I also am on LinkedIn, so feel free to connect on LinkedIn as well to continue some discussions there as well. So I normally speak for many hours, many more slides than this, but I want to make sure that we keep to the time that we have for this conference. I know we're running up against it right now, but are there any questions that we have? There's one in the back. So I'm going to warn you ahead of time is that I am hard of hearing, so I'm going to actually walk down so I can make sure I hear what you have to say.
Check, check. Elvis has left the building. So the bane of my existence is going before the Star Chamber Council of Finance every month. And so I got to go before my Finance Executive Council every month and talk about COGS, which is essentially what you're talking about from not a restaurant standpoint, but cost of goods sold for manufacturing. So my question is, if I follow all your discipline, even on variable cost, et cetera, how do you overcome emotional attachment to SKUs or to products that are dogs that people will just not get rid of?
Because it's come up more than once. He's asking, yes, numbers are important. There's some emotional attachments to dishes, right? Okay, because chefs get emotional sometimes, right, with their dish. So I had this one time. Wait till you hear this story. I had the founding chef for a concept who had a dish that was actually from his family's most profitable item, right? Cost, volume, profit, right? It's the three most important things.
Well done.
I'm set. Time. I'm here all day. So you guys got my cell number, you got my email, you can text me. Feel free to reach out at any point. Thanks.